Hello everyone and welcome to today's More Report on Wednesday the 10th of August with me, Richard Perry, market analyst at Handtech Markets. The European trading session's got off to a mildly negative start on equities, but it's interesting that we're seeing the dollar coming under a little bit of corrective pressure now, pretty much across the board on the major currencies. The dollar is down, and that sort of originated from the move yesterday, actually, whereby the dollar just fell away into the afternoon after the announcement of US productivity data. Disappointing, 0.5% negative for the quarter of Q2, which was third consecutive quarter of negative productivity growth, and subsequently the dollar got sold off on the back of that, and it's impacting, as I said, across forex majors, as you can see with the dollar just under pressure, but also on commodity prices as well. Certainly gold and silver are quite strongly higher. The oil price is an interesting one as well, because at the moment, or certainly until today, it had been quite strong. A little bit of a sort of a mildly corrective candle yesterday, but the sort of move higher in the last few days has come on the back of just noises out from Venezuela that they're going to try and push for an OPEC meeting in terms of wanting to discuss production cuts again. It's sort of impacted the oil price positively, but whether that continues or not remains to be seen. The hourly chart actually shows a very interesting sort of rolling over, but there is a base pattern still in place on oil near term as to whether that continues higher or not. But around 42 figure is a decent level of support now on WTI. Now, in terms of what we've got to look forward to today, the markets are sort of going to be running on yesterday's news from the fact that there is no European data out early doors today. You're looking out for the US data into the afternoon. 3 o'clock. We've got the jobs openings, which is 5.57, which actually is an improvement, certainly on last month. But sorry if I just go down here, you can see it. But last month it was quite strongly underneath expected, which was 5.7. Got 5.5 in the end. So it's quite a big miss on the jobs openings last month, and it's expected to mildly improve back to 5.57. But whether that will help to support the dollar today remains to be seen. Now we've also got the EIA oil inventories. Now last week we had a surprise oil inventories. Another surprise oil inventories gain actually, but the market focused more on the gasoline inventories, which was, if I go down here, you had this surprise gain of 1.4 million barrels. It's expected to come in at negative 1.5, so that's an inventory drawdown. But the big one that markets were looking at was this gasoline stocks, whereby it was a bigger than expected inventory draw. Subsequently, the oil price gained off the back of that. Expected an inventory draw again this week, but be interesting to see how that sort of plays out on the oil price. But as I said, the oil price is just starting to come off a little bit today, but nothing too significant quite yet, but interesting moves nonetheless. So that takes me to my chart today, which is the sterling yen. Now sterling has been in an underperformer, certainly amongst the forex majors in recent weeks, and that certainly wasn't helped by the Bank of England monetary policy easing last Thursday, and that developed this strong bear candle last Thursday, and the bear moves continue. Really, you're still in this downtrend phase. Actually, you had that rally in mid-July, but it certainly has rolled over, and now it's sort of trending lower highs, lower lows, and it just seems to be pointing towards a retest of the lows again. 128.80 is that low. You're sort of having this mild stepped decline, really, which I'll show you on the hourly chart. You can see better. You're actually in a sort of mild downtrend channel, although that downtrend channel is sharper than the downtrend that we've got on the daily chart. But as I said, a step decline whereby you get these sort of phases of consolidation, then the next selling pressure. You had this sort of mild consolidation the first couple of days this week, but again the selling pressure coming back through and pushing back below the recent low of 32.20, back to around about where that is now. But certainly is within this downtrend channel, so any rallies within this downtrend channel are a chance to sell. I've got some pivot lines in here, just zoomed in here to this pivot at 34 figure, which was old support. becomes new resistance, 34 figure. And again, interestingly enough, there's a mild pivot around 33.15 area with old support through the consolidation. Broke to the downside, became pivot resistance. So we're looking at any sort of recoveries really as a chance to sell. In terms of your momentum indicators, you're still negatively configured. Sorry, I'll zoom back out. Negatively configured, and I think any sort of unwinding of the RSI back to the 50s, maybe 60 area, is as I said, a selling opportunity. For probably what we're going to see, or what I believe is certainly going to be seen, is a test that 128.80 level, which is the key July low, and then below that you're looking way back actually. Let me just go back 5 years, and you can see that we're sort of back to levels not seen since 2012, where you're sort of looking at the lows around sort of 17 to sort of 20 area. So there is still downside potential, I think, for a move back, and if we break 28.80, you could see some significant downside once again. So I wish you good luck in your trading on sterling yen, and I will speak to you later. Thank you.